Brian Shannon from alphatrends.net. Today is Friday the 20th of March 2020 and the bloodbath continues. The S&P lost 15% this week, as did the Russell 2000, the semiconductors. The Dow was down 17%, oil down 30% in 1 week. I mean, these numbers are truly something that we have not seen in a lifetime. So let's take a look at the chart. The weekly time frame of the S&P 500, we broke below the December 2018 lows and we closed below that. So in order to frame this at all, we need to back up even to a monthly chart. And as I put on Twitter, not too long ago, fear knows no support, and we've got so much uncertainty and fear here. We've broken this trend line from the 2019 highs and the 2029 lows rather. And what we want to do when we look at volume weighted average price levels, we look at them like anything. That is, we look for potential levels of support or resistance and places where the market may slow down. So we take an important low like the December 9 low, the 09 low, and you can see that that level was touched here and then again right here. So we add volume weighted average price levels from there. Well, the next time that we touched these levels was this volume weighted average price, and that volume weighted average price held as support over in here. So perhaps we're heading down towards this level. This is a level of interest, 218. That's another 11 points away. It's a potential level of support, but we have no idea until after the fact. They are just levels of interest. We're beyond the 38.2% retracement of the 09 low up to the recent high. So, we are clearly just in a bearish environment. And clicking over to the 15-minute time frame, I posted this chart numerous times on Twitter this week in StockTwits. I've got the 5-day moving average on here, and as you know, if you've listened to me for any period of time, when the market is below a declining 5-day moving average, I always say we're guilty till proven innocent in the intermediate term time frame, and that rallies should not be expected to hold. Well, that's exactly what we saw. We saw on Thursday, we got right up to that declining 5-day moving average, and that was the high of the last few days. What I also have on here is this is our week-to-date volume weighted average price. So the average price that the SPY traded at this week was 242, leaving everyone in, with losses. And the volume weighted average price from this low that people thought was going to hold is up here also at 238, just showing tremendous devastation in accounts and things that aren't going to heal quickly. We are in a downtrend. We will get big bounces. We've seen big bounces. This was a big bounce. This was a big bounce. That was a big bounce. But we are in a bear market. They will be guilty till proven innocent. There's no reason to try to be the first one in and pick the bottom. If they don't scare you out on the way down, they will typically wear you out. It's going to take time to heal. And, this is, we still have so much uncertainty about the market that, in the macro picture, that it doesn't justify taking trades. Not, again, with the declining 5-day moving average. And even if we're to get above that 5-day moving average, always be aware of how does it get above it. So let's say, for instance, on Monday we get above the 5-day moving average. Does that mean I would be bullish and want to buy right here? Absolutely not, because you have to ask, where has it come from? If it comes from 229 to 250, I don't want to be the dope who buys up there. I want to see it pull back first. I want to see it make a higher low. I want to see the 5-day moving average flatten out and then turn higher, and then maybe I would consider buying, somewhere here, not above that high, because I don't want to chase, not in a downtrend. And then a stop would go underneath whatever the most recent higher low ends up being. So I don't want to talk about all of the markets today because they all look the same. They are all in terrible shape. The weekly or monthly chart of the NASDAQ, we could put some VWAPs on there and go like this, and maybe even, then off of this level, and then we hit here. So that would tell us that maybe this is where we end up finding at least, a stopping spot, 155-ish. That's still a long way to go from where we are. So going into next week, any bounces that you have, that we get with positions that you're not comfortable holding, look to lighten up. This market is not going to heal quickly. I'm going to end it here because, again, I don't see any reason to go over all the markets. They are all in terrible downtrends. This is USO, the oil ETF. They are just all in terrible shape. I do this analysis for subscribers every single day, pointing out the key levels on the SPY, the Qs, the Russell, the semis, the financials, and then we're going over individual stocks. And we've had some good ones actually this week. So anyways, have a good restful weekend, stay safe, and I'll talk to you soon.